Det har varit stängt på de kinesiska fastlandsbörserna i 2 dagar, men ändå mycket fokus på Kina just nu. Inte minst konjunkturen är ett stort frågetecken, precis som nedstängningarna på grund av covid. Intressant läge, och vi har med oss nu här på morgonen Catherine Yeung, investeringschef på Fidelity. Good morning, Catherine. To start with, we have reported about the nervous market in Asia, not at least because of the COVID situation. How would you describe the situation right now?
So the ongoing lockdowns in China, predominantly Shanghai, but now there are some cases in Beijing, are still making, it appears, investors quite nervous, especially regarding the potential stimulus that could be added to the economy to really maintain that GDP growth target of 5.5%. But today was interesting in terms of our trading session in the morning, because there are rumors going around that, in fact, the co-founder of Alibaba, Jack Ma, was under a security probe or being investigated. As it transpires, though, it's likely that the gentleman in question is a different Mr. Ma, and a well-known commentator on in terms of central government media on Weibo, which is one of our chat forums in China, clarified that due to the way Chinese names are written, this Mr. Ma had 2 Chinese names versus Jack, who's only got 1, and it saw, as a result, some stability back in the market. But I guess the overarching point about this story is, if a surname can cause so much market jitters, it just shows you how we're probably in for a volatile couple of months looking ahead when it comes to China, just because of nervousness.
Nervousness and a lot of uncertainty, obviously. Some days ago also, Catherine, we got some interesting indicators from China. The Purchasing Manager Index, PMI, fell quite sharp in April, the lowest in 26 months, I read. What's your view? Were you surprised from the numbers?
No, not surprised. So with this lockdown, again, we've seen the lockdowns in China throughout the pandemic, but the Shanghai one really is taking a lot of airtime because there've been an incredibly strict lockdown in the city since March, and likely are not going to see these lockdowns being lifted for a couple of weeks maybe, or even towards the end of the month. So the weakness we're seeing in data is something that investors need to be mindful of, both in terms of sentiment, so consumer sentiment, even though we do expect this pent-up demand to play out once the lockdowns are lifted, as well as disruptions to supply side, so in particular manufacturing and just overall business sentiment. But again, we're probably seeing the lows, and what's really, really key is the PBOC's response and their balance sheet or tool set to really add some supportive measures to really increase that GDP.
Exactly. We saw, as you mentioned, we received an important news from the China's Politburo last week around added support from the government. The market really appreciated that news and rallied. What's your view? Was it important what they did?
Yes, messaging like this is important when it comes from the senior government officials. So it was the first quarter Politburo meeting, and the narrative or the rhetoric or messaging is really about promoting that stability, focusing on economic growth, and they're looking to do this through, for example, infrastructure, both old infrastructure as well as new infrastructure. There was some talk around property measures, so easing some restrictions. So across 70 cities, local governments encouraged to implement more easing measures, albeit that sort of the topic about homes being where you live versus speculative investment purposes is still very much maintained. And then the healthy development of internet platforms. Again, just that sort of angle towards the consumption story, because the internet platforms are in fact so important when it comes to not just what the consumer buys in China, but how they buy it.
In general, Catherine, I mean, it's a large difference between how the East and West are acting right now when it comes to monetary policy, global inflation, very big concern in the rest of the world. In China, not so much. Could this change in the future, do you think?
It's more about the markets probably being disappointed with the lack of easing that the authorities have added. So again, from a balance sheet perspective or a tool set, they do have the means to do so. They're just being very, very careful. And it's about that stability aim that they're after. But certainly even in this part of the world, the Reserve Bank of Australia increased rates more than expected today. You've got the Federal Reserve, you've got global inflationary pressures, high commodity prices, high food prices. In China, inflation is the least also very low down in terms of the risk parameter, or the risk worries, I should say. So really, at the moment, it's about just focusing on that stimulus that the Chinese authorities are going to put in. It's not about, it's almost think of it like a car and driving a car, not too much, but not slamming the brake on too much. And I think what's going to be very important as we go into the second half, we've got the Congress meeting, which is really, really key in October, November. And before that, you're probably going to see even further supportive measures, potentially some changes when it comes to COVID policy, not all out, just disbanding all policy, but that, again, that sort of focus on the domestic demand story and really ensuring their stability. So the second half probably looks a lot more attractive or more promising than this part of the year. But having said that, from a relative perspective, with valuations trading where they're at, just ensuring you buy the right companies that do have that earnings visibility, it's a conundrum, because a lot of asset classes are sort of have risk from a different perspective, as you just highlighted. So it's a bit of a relative game at this point in time.